Hey everybody, we're back. Today we are going to be going over Tesla's financials. With the recent election and their stock hitting an all-time high, I'd like to really just dive into making sure they're actually improving and being more successful. So make sure to subscribe and let's get into it. All right, so just so everyone's aware, I'm recording this probably 6 hours after that intro, but I had to go do something right after I recorded that. So we're just going to hop right into Tesla here. So cost of capital is right at 11.1%. No big deal considering it's a car company. It's kind of expected to be more expensive with investments and all their inventory and all that. Target price is way overvalued, but to be fair, they also just very recently went up very, very high. I think after the election, they were up over 10%. I honestly don't remember. Long-term growth rate looks decent. Honestly, could be kind of low considering the industry, but I'm just going to keep it at 1 because I don't really have an argument against their long-term growth rate. Sales are consistently increasing this is actually quarters, but even in the quarters, they were consistently increasing. But for the years, it looks like same exact story, consistent increases. Operating income, basically same thing. They're actually no, their operating income has been going down despite their sales going up. So one thing with that is it could just be their cost of goods sold possibly going up, or SG&A expense, which could also go towards their research and development. But yeah, it looks like their SG&A expense, especially in just research in general, has been going up a lot more. So from 7 billion to over 9 billion. So I mean, that could kind of cut into their EBIT, or they're just I honestly don't even know what to say for it. It seems like their sales are increasing steadily, but their operating income isn't at all. It's actually been going down. So that is kind of a concern. I'm going to give it the 0 there. And then their net income has been a little bit better. I mean, considering it's estimated to be higher than it was 2 years ago, but it had a spike in 23. I'm going to do the 0.5 for that because they have seen very good growth with it, but compared to the operating income, it's doesn't look great. EPS is essentially the same story as the net income. It looks like it's going to improve, but I'm still going to give it the 0.5. And that's also why I have EPS weighted lower here, is just because it essentially tells the same thing as net income, but it's still important to look at. Total shares outstanding looks like it's been, I mean, it has been going up consistently. 3.2 compared to 1.8 in 10-ish years ago, which again, that is a very long time, but still. Just in the past 4 years, went from 3.1-ish to 3.2, which isn't the craziest, but it's still, they are consistently diluting, which isn't exactly what you want to see. But let's head over to the balance sheet, see what that looks like. Cash looks not great, although this is probably in billion. Yeah, this is in billions. So actually, cash looks very, very good, especially compared to their short and long term. It actually looks excellent. So we're given that. Short term looks great, very, very coverable. Long term, oh, sorry, that's assets. Assets still look excellent. Short term looks excellent. Long term really is not that much compared to their cash reserve. So even though it's not really decreasing, although it has actually, no, it is decreasing, especially from 2020, has been going down a significant amount. Let's see retained earnings, see what that looks like. Again, turning positive and is very positive as of the last year, which is excellent. It's not often we see a full positive score from the balance sheet, so that is a pretty positive thing to see for them. Let's look at cash flow. looks like it is increasing. Had a high in 22, went down, but came back up, or at least is estimated to go back up. So honestly, I am going to give it the positive just because in terms of the long-term growth, it's very, very good. And honestly, even still, I don't know what the figure is here. I believe it's in millions. Yeah, millions of USD. So even still, 14 billion of positive operating cash flow is excellent. So they are getting that no matter what. Huge negatives here, which is always nice to see. Financing is turned positive in the last 2 years, which I'm really not a fan of. But I could give it the 0.5 just because compared to the operating, it's a fairly low amount. But it seems like they were negative. Yeah, I just don't know. They were negative for it, and then they recently had to turn it around. So I feel like that's not worth the 0.5 considering it's over 2 years. And then for free cash flow, they have been consistently positive. It has been going down for the last 2 years, but they are positive, which again is primarily what we're looking for. Let's go into the use of cash, see what they're doing there. I doubt actually they are repaying debt, and it does look like they're at least they outpaced in 2020, they outpaced in 21, didn't issue any debt in 22, and they issued more in 23. I think I'll do the 0.5 for that because overall in the last 4 years they've been better with it. In terms of repurchasing stock, though, they have not, which is not what I want to see. Let's head to the segment history just so I could show this visualization. This is their sales growth over the past 10-ish years, and it is just insane. Considering they are at 96, I believe, billion compared to 3 billion 10 years ago is absolutely baffling. Sorry for that. It is absolutely baffling that they have been able to achieve that growth. Well, let's go into the ratios, see what that looks like. So for their net margin, we are looking at consistency, which is excellent considering their sales have been increasing. So even though, as we saw here, operating income is down, total shares, whatever, EPS is down, net income is down, their net margin has actually increased, which is really, really good to see. So I love that. That is excellent. ROA, ROE is fairly consistent with what it has been, increased from 2 years ago, decreased from 1 year ago. That's really no big deal. And then long-term debt to total equity has actually been dropping, which is good to see. A little bit of a rise over the past year, but that's no big deal considering it came down from 22.9 to 10.4. That's pretty solid. So I'm going to give it the full score there. And we can see here 15.5 out of 22, got a final score of 71. Let's finalize that with a score 71, 11. So really fairly solid. Let's rate this properly. So about middle of the pack here, a little bit higher. 71, I would say, is a fairly good score. I would say anything above a 70 would be considered good based on my rating scale, and anything below should be questionable. But I believe that is it for Tesla. Overall, fairly decent. Hope you enjoyed. Make sure to subscribe if you haven't, and I'll see you next time.